back. Time for the word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee strategy founder Michael Lee. Also with me is Mark Tepper throughout the morning. Mike, thanks so much for joining the conversation.
Thanks for having me.
And markets are selling off this morning as we watch the interest rate spike. The 10-year is at 5% this morning, and the Dow Industrials, as a result, down 177. The Nasdaq down 92. We got a busy week of third-quarter earnings, and then, of course, we've got some economic data as well. I want to get your take on the 5% yield as we await technology giants Alphabet, Microsoft, Meta, and Amazon all reporting earnings this week. Mike, what are your expectations, and how important is this 5% level we're watching on the 10-year?
Well, look, it's significant, but we've been leading up to this. I mean, we're looking at the largest peacetime period of expansion fiscal deficit in the history of our country. And so one thing to consider with yields this high is what were once kind of your go-go growth stocks and what would be considered risky have now merged into almost staples. And these four companies reporting this week, in Microsoft, Google, Amazon, and Meta, all have fortress balance sheets. And so they have the easiest ability to finance themselves. So these interest rates affect them the least amongst all other major corporations. I think that holds true for all the Magnificent Seven. And so what you've seen is, particularly over the last year, I think we bottomed almost exactly a year ago, is that money, the stocks are probably a little bit oversold, but these businesses have done very well. And the stock performance from these companies has been stratospheric, and they have performed extraordinarily well. I'm interested in their earnings this week, mostly because of the guidance. I think we're going to get spectacular earnings from Meta, almost a double year over year, with some pretty significant revenue growth, as well as good earnings from Microsoft, decent earnings from Google, and then we'll have to see what Amazon says about their cloud business. And the knock on that company has been the slowing of growth. But what are we going to hear about guidance going forward? We got some really troubling guidance from one of my favorite companies to follow, from ASML last week. They make the machines used to build semiconductors and advanced microchips for AI. Okay, they warned for next year, saying they expect flat guidance as they're seeing orders canceled across the board. So if semiconductor manufacturers are not going to expand their production lines, what does that say about the growth for semis and chips for the next 12 to 24 months? Yeah. Okay, if that is slowing there, that's a very good leading indicator that things are slowing down. Are we going to hear the same things out of a Microsoft and Amazon from their cloud business, where I expect advertising from Google, from Meta, to be extraordinarily good?
So do you want to sell into these rallies then? Because, look, Mike, look at these stocks year to date, double-digit, even triple-digit gains year to date. Do you want to sell going into the earnings?
Well, look, I think the safer play for these ones are on the communication sector, the Meta and the Google, and a little bit more unknown in the Amazon as well as the Microsoft, because it's a lot more enterprise on that end. So I don't know that I'd be selling. However, if we do get a really ugly earnings report, as we did with Tesla last week, this is a good opportunity to add if you're a long-term holder, and if you need to be in the market and you need to hide, the communications over tech, in my opinion.
Well, look, this war on Israel has taken everything else off the front page, Mark, including this auto workers